Good evening. Happy Saturday. Welcome to night 5. Hello, TikTok, YouTube, LinkedIn. Let's get Instagram in here. Happy Saturday. Okay, so it actually might work today. Let's put that on mute. Oh. When you get here, let me know what city you're joining us from. All week, this is night 5. This is our bonus night. We've been talking about financial literacy for cosmetic nurse practitioners. We started off by talking about the cash flow quadrant by Robert Kiyosaki. We talked about the difference between an employee, being self-employed, and a business owner. We have talked about being an investor. But tonight we're going to give you actionable steps you can take so that before the day is over, you can say that you own part of the industry. And this is what we've been building towards all week. In night 1, we covered the 4th quadrant of the cash flow quadrant and the total addressable market in cosmetics so that you can stand out in what some like to call a competitive and saturated market. But that's only that way if you only look at one piece of the pie. On night 2, we talked about your 6 foundation accounts. This is where you put your money. Remember Aaliyah? She was our experienced nurse practitioner who already owns her own business, and she was already ready to scale her business. She only had that one checking account for everything, and we fixed that for her. On night 3, we covered the 6 advanced accounts. This is how to make your money grow. We talked about Roth IRAs, brokerage accounts, HSAs, and we talked about Maya, who opened her brokerage account and started investing $100 every 2 weeks. On night 4, we covered dollar cost averaging. This is your strategy on how to get started. This is a strategy that removes that emotion and time, trying to time the market and manage your anxiety about the fear of whether the market crashes or not. Remember, you can't time the market. It's better to have time in the market. You just need to show up consistently for your account. We want you to show up consistently for your clients. We covered the scarcity trap by talking about Marcus, who was a nurse practitioner with over 30 years of practice, and he was looking at retirement the next decade, but he just didn't have enough. We talked about how he finally started investing by just doing with $1,000 a month, even though he was 58. By the time he retired, he could still look at having a respectful amount of savings in his account. Like Marcus, it's not too late for you. It's never too late. And tonight, we're going to get very specific because look, most nurses think investing is just putting money in our 401ks and hoping it grows by the time we're 65 or sooner, especially if you're part of the FIRE community. This is financially independent, retire early. But I want to teach you how to think like an investor in our own industry because this is what I believe. And I know that nurses are investors and we're investable. When you think about growing a business, you think about capital and access to that capital. So many times you hear people complain about venture capitalists and people won't give us money and they don't understand that we're edged out of the market. You don't have to worry about that. Go to other nurses who already get what it is you're trying to do. Nurses, what people don't know, these nurses have money too. They might have $5,000, they might have $50,000. They might have $500,000 into your business. And even if they don't have it, they can go get it really quickly. So we're primarily positioned to be investors, and because of our master skills, master communicators, we have access to human data you're never going to be able to find on Google. Our ability to manage complex cases with very few resources and to explain the complex situations to people that we just met. We have so many skills and so much value to offer to companies that makes us very investable too. Start looking for venture capital, we start investing in each other. But before we can invest in each other, we need to learn how to invest, period. And that's what all week has been about, financial literacy, not just for you personally, but for our profession. And this is exactly what we cover inside the Alliance of Cosmetic Nurse Practitioners. But we're not just teaching you how to inject, we're teaching you how to build wealth. We're the only organization founded on the 9 pillars of advanced nursing practice, which include patient care. Everyone covers patient care. You went to patient care school, but that's it. We also cover personal well-being because you matter too. We're the patient too. Professional development. Professional development is not just going back to another degree or certification. Financial literacy. You're seeing what that looks like right now. Research, policy, media, technology, and business. Because nursing school ignores skin of color. Most dermatology training ignores entrepreneurship. In all your cosmetic training, it never covered advanced nursing practice. The Alliance was built to address all three of these because every single day you show up with all three hats and you have all three questions at the same time. You pick up where your weekend, your on demand, or your academic program leaves off because what we know is after your first question is never your last question. Where are you going to go when you have more questions? And so we provide that ongoing mentorship and coaching. Either we offer your didactic training. So either after you've gone somewhere and paid that $2,000, we're there to continue with that and nurture that. You can never expect in that one training that you're going to remember everything. So we're there to build on what you've learned so you can keep growing. And if we're your first stop, then we build that foundation so that when you show up in clinic and in practice, you have something to work with. I train a lot of MPs, and I'm telling you, there's a big difference between someone who comes with me who's done some learning on their own. They've applied discipline, they've invested in their own learning, and they own that learning. And what I'm able to do in clinic and how we're able to maximize our time together because no one can ever teach you everything you need to know. And so being able to have that foundation for your learning, the loneliness that comes with entrepreneurship, and the overwhelm. So you don't have to figure everything out on your own. And maybe you'll find partners that you can invest in and build with. We built a table and we invite you in your chairs. So like I told you, we have a promise for you tonight that I would give you a concrete plan. I told you we cover the top 3 stocks, ETFs in beauty and healthcare that you can start investing as little as $100. So welcome everyone. Caleb's here. So I'll bring in Caleb later before we wrap up. TikTok, thank you so much. You have been absolutely wonderful. Your engagement is outmatched. Instagram, we thank you for being here. YouTube and LinkedIn. If you missed any of the lives this week, you can go back and watch them on LinkedIn or YouTube under my name, Kimberly Madison DNP, under the live tab. I always record live. It's my number one recommendation to avoid social media burnout, but to help you stay consistent and persistent. If you're consistent and persistent, your business will grow. If you're consistent and persistent, investment will grow. That's what we talk about, that compound interest. But I record and do these batch content days every once in a while. You can find every week on Tuesdays at 10 a.m. Central. I think it's 10 or 11. I can't remember what time I picked. So let's talk about it. So I've been telling you to invest in the market. And what we're talking about, you're going to actually be buying is what's called a share. So a share, think of this as like a digital certification ownership. So when a company like Lilly or Ulta wants to grow, to build a new factory, research a new medication, or open 500 new locations, they have two choices. They can borrow money from a bank, just like you, and take on debt, or they can sell pieces of the company to the public. These pieces are called shares or stocks. When you buy a share, you're not just gambling on a ticker symbol. That's the little 3-letter abbreviation that you see running across the screen. You're buying a legal claim to a fraction of that company's assets and their future earnings. You own a sliver of their real estate, you own a sliver of their intellectual property, and you own a sliver of any profit that they generate from every patient who walks through the doors. There's 2 ways you can make money: growth, appreciation. This is the company becomes more valuable over time, so your slice becomes worth more. This could be buying like the worst house in the best neighborhood, or you can make money through dividends. This is a profit sharing. So the company makes so much cash that they send a check directly to you, the investor, just to say thank you for holding the stock. Now, buying a share is the difference between being a consumer, which gives them money, and an owner who gets paid when they win. Now, before I give you these picks, I want us to look at the landscape. You always want to step back and look at the big picture. So I went to Yahoo Finance. That's a website you can go to, just like we tell our patients where our resources come from, so we're more transparent. You need to find out credible resources that you can go and validate everything. I'm not a financial expert. Even if you hire a financial expert, you still want to have some baseline understanding. That's what financial literacy is. It's synonymous to health literacy. We want our patients to have some baseline knowledge so that when we're talking to them, they can follow along and understand. Because at the end of the day, they're going to go home and manage their health. You're going to go home and manage your finances, even if you're paying someone. So you can go to Yahoo Finance. I told you about Investopedia. These are wonderful resources. So I looked at the healthcare sector. This is the ecosystem that we work in every single day, 7 days a week, all year long, regardless of what's happening in politics and what's happening on the calendar. When you look at this list, I want you to understand one thing: size matters. If size matters to you, put size in the comments. We rank these companies by market cap. That's what the company is worth to their investors. It's it's different from revenue, which is how much cash they bring in. So let's talk about United. United Health makes the most cash because they collect premiums from everyone. Eli Lilly is worth more because investors believe they own the future of medicine. So let's break down who actually makes money off your labor. Eli Lilly, ticker symbol is LY. They recently became the first healthcare company in history to hit $1 trillion in market cap. Why? You already know the answer. It's not instant anymore. It's Mounjaro and Zepbound. If you're an NP starting a weight loss clinic or thinking about it, you understand your position. You are the distributor. They are the supplier. You're doing the consults. You're managing the side effects, answering those emails, dealing with the prior authorizations. They're making $1 trillion. Now, as an investor, if I'm gonna build a business selling their drug, I should probably own stock in that company making it. And a lot of times when you first get into investing, that's the first thing people are gonna do. Tell you to invest in companies that you're already doing business with. That's half true because you might be doing business with a company who's tanking. So that's only half true. Now, this is what I mean when I say nurses are investors. You already understand these industries. Eli, United Health, some of you work for them. You already know which companies are winning. You just haven't been taught how to invest in them. And then we have AbbVie. These are the owners of Allergan Aesthetics, Botox, Jupiter. Every time you buy a vial, you're paying their rent. You're sending their kid to a really nice school. You're fueling their stock price. Now, if you're in the self-employed quadrant, like we talked about earlier this week, AbbVie is your biggest expense. But if you're in the investor quadrant on the side where your money makes money while you're sleeping, AbbVie is an asset that pays you dividends. You see the difference there? If you see the difference, say yes in the comments. Now, you can be self-employed and an investor at the same time. In fact, I hope you are. With all this education we've been doing all week, that is definitely the goal wherever you are. Employees, self-employed, don't need to wait for another degree, another certification, for someone to mentor you, to give you an opportunity, to respond to your email, to give you an interview. You don't need none of that. You don't need any permission, just like you don't need permission to start your own business. You can buy Botox from AbbVie for your practice and own stock in AbbVie, so you get paid when other clinics buy Botox too. That's building wealth on multiple levels. Now, there's always caution, right? Let's look at some of the device companies like InMode. They own Morpheus 8 or Cutera, a laser company. Now, look, a few years ago, they were high flying, and today they're struggling a little bit. High interest rates make it hard, you know this, for clinics to lease expensive lasers. If you're a business owner, you might be tempted to buy one of those $150,000 lasers because it's trendy and because you haven't invested in understanding the art of sales or the art of marketing. You don't understand what it takes to attract that client. You've only invested in treating the client, the patient care part. But there's the whole business aspect, consumer psychology, customer acquisition, retention of that client, understanding who your avatar is, addressing their pain points, standing out in a saturated competitive market, identifying a niche and being able to master that niche. You don't understand any of that. You haven't decided to invest in any of that. So because you went and paid $2,000 for Botox and filler, you assume people are just gonna show up at your door because you care and you're passionate about aesthetics. It doesn't work like that. So the next assumption, okay, I spent $2,000 on Botox and I can't, no one's gonna hire me because they want 2 years of experience. And so all the advice tells you to go start your own business because that's what I did. That's what the person will tell you. And now because you've invested now $2,000 into Botox, malpractice insurance, marketing, website, a VA, you feel like, okay, I'm losing more money than I'm making. I should probably buy a laser, lease out a laser that will definitely attract people because I see people getting quick results on social media. And that's all I see. So it must be working for them. And then 2 or 3 years later, you're in a group chat talking about your bankruptcy and selling everything. You're burnt out and you haven't been able to break even. You don't have enough people walking through the door and you can't retain good staff. It's more than Botox, friends. You need to do more than take a Botox course. So you invest in that expensive laser. Look, but as an investor who looks at their balance sheet, they see a company that's in trouble. They don't see quick results. Now, this is why financial literacy saves you money and stress and saves our patients from adverse effects. Don't sign a 5-year lease with a company that might not be around in 2 years. This is what I mean when I companies are training for cosmetics ignore advanced nursing practice. This is the ethical part of our practice. We do things that are medically necessary. They'll tell you to buy the laser, they won't tell you to check the company's financials first. We're teaching you both. Say both in the comments if you're finally getting why this makes sense and why this is so important. Now, let's look at Ulta Beauty. They're crushing it. Why? Because they understand the consumer better than we do. Ulta is a partner in the 15% pledge. This is something I've written about in the High Dermatology blog, specifically for you. When we talk about big business, we talk about companies, we can't talk about them like we're absent. We're all in this now too. We're all starting our own business. We are the them that we're talking about. It's important that we have sustainable practices, ethical hiring practices, and that we're treating people the way that we want to be treated. We're treating people the way that we were treated and why we left wherever we were to begin with, why we thought that cosmetics was an answer to our burnout. Now, Ulta is a partner in the 15% pledge. This means dedicating shelf space to Black-owned brands. Guess what? It's working. They're proving that equity is an asset class. When you serve diverse populations and expand that total addressable market, the TAM that we talked about on Tuesday, and like we talk about all the time in Mahogany Dermatology Nursing, you win. The market rewards inclusivity, niching, because the market is diverse. This is why skin of color dermatology isn't just the right thing to do clinically, it's the smart thing to do financially. When you master skin of color, you expand your total addressable market. You serve patients that other clinics are afraid to touch, and you position yourself to capture revenue that other providers are leaving on the table. Literally this week I attended a webinar and there was a 30-second skin of color educational piece where they said skin of color patients are more difficult to treat and their cases are more complicated. That was the skin of color education for the whole session. The truth is, we're not being taught properly how to identify changes in skin of color. And so they're being misdiagnosed and undiagnosed and properly treated and evaluated. So it's not them that's inherently more difficult or complicated. It's us. And we should own that and not continue to blame the patient. And then that was the end of the conversation. There's no solution. There's never a solution. We just keep talking about the problem. But you're here tonight because you don't want to do that anymore. Now, let's move on because I can go on this all day long. So when you master skin of color and you expand your total addressable market, those clients that other people aren't willing to touch, and all the saturated competitiveness that's talking, you don't even have to worry about that. Now, let's fulfill the promise for tonight because you might be looking at Eli Lilly, who's trading hundreds of dollars a share and thinking, I don't have $1,000 to buy one share. Now, that brings us to the most important concept for you if you're a new investor. Fractional shares. If you understand fractional shares, put fraction in the comments. Now, remember when we talked about the brokerage accounts? This is where this comes into play. So apps like Robinhood, which really took off during the pandemic, Fidelity, with a lot of healthcare entities might be storing your 401k, or Cash App. I personally love Webull, my favorite. And it's an app as well as a website. Now, this is just a website, you create an account, you link it to your bank account, and you deposit money back and forth. This is real. Like I told my brother to do this, and he was like, oh, they want my social security number. Yeah, they want to make sure that the person they're talking to is you and that you're going to get your money. So it's legitimate. Now, these apps, these companies, these websites allow you to buy a piece of the share. Now, if you have $100, you can put 33 with 3 different companies. You don't need to be rich to start. You just need to get in the game. Now, remember last time we talked about scarcity? This is you waiting for the right time, waiting until you have enough money. That's scarcity thinking, and it's what's kept markets stuck for 30 years. Now, abundance thinking is I can start with $100. I can start today. I can start as I go. So if I were building a cosmetic NP portfolio is a collection of where your assets are. These are the top 3 stocks I would recommend, or I would look for or put on my watch list. Okay, the stock pick is your growth plan. Eli Lilly. If you already own Lilly, put Lilly in the chat, or you can put the symbol LLY. Now, why is this a top pick? Investing here is betting that the demand for weight loss and metabolic health is not a fad; it's a future of medicine. You're believing that the desire and the need for people to lose weight isn't going anywhere. You're already seeing this in your clinic. Your patients are asking about Mounjaro. You're recommending it. They're asking about Zepbound. You're writing those prescriptions. You know this is a real demand. And the strategy is buy this one for growth. But you expect that over time the price is gonna go up. We've already seen that it's been going up. They already have I was in one of my first contracts as a nurse traveler was in Indianapolis. That's the home of Lilly. That's where I learned about how big they really were. They already announced they're putting a site in Virginia. That's my home, the DMT DC in Virginia, and they're building one right here. This is my actual home right now. They're not going anywhere. We already know about their injections, and they announced a pill. People have been asking for a weight loss pill forever. It's finally here. It's not going anywhere. Now, the income play, AbbVie. Now they're the dividend king. They pay their shareholders. Shareholders are the people who buy the stock. That's you. They pay cash just for owning the stock. Thank you for supporting us. Thank you for giving the cash that we need to stay in business. Even if the economy slows down, people still get their Botox. You know this is true. You've seen it. Even during the pandemic, people kept getting Botox. The strategy that you want to know is buy this for income. It's a defensive play. It's a stable bet. Now, what exactly is a dividend? Think of this like rent. If you own a rental property, tenants pay you every month just for living there. You don't have to go to fix the toilet every day just to get that check. You get it because you own the asset. Home. A dividend is rent payments from a company. Companies like AbbVie or Johnson& and Johnson, who loves nurses. If you're looking for a scholarship, go check out Johnson& and Johnson. You can work for Johnson& and Johnson, by the way. Now, these companies are so profitable that they can also reinvest all that cash back into the business. What a dream. So every quarter, they take a portion of their profits and send it to you. If you own the stock, the cash hits your brokerage account automatically. So if you're in Cash App, Webull, or Robinhood, or Vanguard, or Fidelity, you're going to see it in your account. You didn't have to clock in. You didn't have to seek more patience. You didn't have to open one chart. Your money for you in your sleep. That's the goal. Put sleep in the comments if that's your goal. This is why I call AbbVie a defensive play, because even if the stock price stays flat, they're still paying you rent 4 times a year just for holding the keys. Now, this is the part that might make you uncomfortable if you're a nurse or a nurse practitioner, but it will make you wealthy as an investor. Publicly traded companies like United Health or Eli Lilly have a legal obligation called uh, fiduciary duty. This means that the CEO does not work for the patients. The CEO does not work for you, the employee. I'm preaching to the choir right now. You know this, but you don't know why. Now, the CEO, they work for their shareholders. Remember I told you at the beginning when that company, it could be your company, it could be your med spa, you're ready to grow, you need money to grow. You might go to the bank and you might go to the public and ask for some of that money. You make a promise to them to give them their money back. Now, their number one legal job is to maximize the value of that stock. When you see United raise premiums, that is to benefit the shareholder. When you see hospitals cutting staffing to save costs, it doesn't mean they don't care. It means that they're there to protect their shareholders' profit margin. When Eli Lilly sets the price of Mounjaro, that is the drive of the returns for their stakeholders. As a nurse in the employee quadrant, this feels unfair. You feel the squeeze of cutting costs. As a patient, consumer, it feels very expensive. You pay higher premiums. But the investor looks at this and says, if the system is legally rigged to benefit the shareholder, I need to be a shareholder. This is essentially, you can hate the game, you can learn how to play. When you buy the stock, you stop being a victim of these systems and you start being the beneficiary of them. You go from the person paying the price to the person collecting the profit. That's the shift. Now, pick number 3, culture play. Now, this isn't just about makeup, this is about strategy. Put Ulta in the comments. Now, Ulta is a leader because they embraced the 15% pledge. In 2020, Aurora James issued a challenge to retailers. Now, she's a Canadian founder and creative director of luxury accessories brand, Brother Bellies. If I'm saying it wrong, put Bellies in the comments. Now, she launched in 2013 to preserve African design traditions and support global artisan communities through sustainable handmade products. And she said, Black people make up 15% of the population. We should own 15% of the shelf space. This wasn't asking for charity. It was asking for economic equality and smart business. This is just like when you pick a school and they say, oh, we have so many, we invest, we believe in diversity, and we like to promote more Black and brown students to our schools. What you don't recognize is it's like, let's say it's 50% of the school. It's never gonna be more than 50%. They have 15 shares available, and once those shares are filled, that's it. That's the cap. Now, when it comes to Ulta, they accepted this challenge. They aggressively stocked Black-owned brands, capturing the diverse consumer spend that other retailers ignore. Investing in Ulta is betting that equity is an asset class, something that's gonna grow. When you reflect the population of stores, your profits go up. This is what I mean when I say equity is profitable. Ulta figured this out, and you should too. The strategy is buy this because inclusivity wins. Numbers back it up. Jay-Z said the numbers don't lie. Men lie, women lie, the numbers don't lie. Put numbers in the chat if you agree. Now, what if you don't uh, what if you don't wanna pick winners and losers, right? It's a little too much. Lilly, AbbVie, Ulta, it's hard to keep track. This is where ETFs come in. This is exchange traded funds. ETF is a basket. You buy the basket, you own a tiny piece of everything inside that basket. Now, remember when Maya bought an S&P 500 index? That's an ETF. She's not picking individual stocks, she's buying the whole market. So let's look at the top ETFs for our industry. Now, XLE. This is a healthcare select sector, SPDR or SPIDER. Now, before you buy this, you need to understand the name. You see SPIDER, you're gonna see it more than that here. See the acronym SPDR. The finance world is pronounced SPIDER. It stands for Standard and Poor's Depository Receipts. But you don't need to memorize that. The simple way to think about it is think of SPIDER like Nike. Nike is a brand that makes many different types of shoes, running, basketball, lifestyle. SPIDER is a brand that makes many different types of ETFs, healthcare, retail, tech. And just like Nike is the company behind the shoe, the company behind SPIDER is called State Street Global Advisors. Why does this matter? You wanna know who's holding your money. It always goes back to the money. State Street is one of the big 3 asset managers in the world, managing nearly $4 trillion. They actually invented the ETF back in 1993. I tell you guys all the time, all this stuff is made up. Now, you might know them for something else. State Street is the company that placed the famous Fearless Girl statue on Wall Street, the ponytail girl staring down at the charging bull. You can Google that. They did that to challenge companies to put more women on their boards. Put women in the comments if you've heard this story before. So when you buy a SPIDER fund, you're investing in the company that really turns the face of Wall Street. Now, what you can change the face of Wall Street too. That's what the stories like this tell you. It's never too late to make a difference. Now, what about that select sector part? This means they took S&P 500, which is the varsity team of the United States economy, and they sliced out only healthcare. To get on that list of the S&P 500, a company has to have 2 things: a big market cap and be profitable, that means make money. So when you buy XLB, you're betting on the winning team. You own Lilly, United, and Johnson& Johnson, as well as Pfizer, all in one basket. If one goes down, the others pull them up, and they make sure to keep the top performers in that basket. What's inside? Eli Lilly, United Health, Johnson& Johnson, and Pfizer. So this is diversification. So instead of just all your money in that one basket, like you feel a little anxious, you have a little piece of the best performing, companies. The infrastructure fund, IHI. iShares US Medical Devices. What's inside this one? Intuitive Surgical, Abbott, and Stryker. If you've never heard of Stryker before, next time you go to work, which might be tonight, shout out to the night shift, go ahead and look for Stryker. You're gonna see it everywhere. Now, Stryker, while everyone else is buying sexy lasers that depreciate, Stryker sells hospital beds, knee replacements, and surgical navigation tools. Hospitals can't function without those. People might skip on microneedling in a recession, but they don't stop breaking bones. And you'll hear it when you continue to listen to people who are financial experts, you'll hear something called recession-proof stocks. So this is an example. So people don't stop needing surgery, and they don't stop falling. Investing in IHI means you own infrastructure of medicine, the boring stuff that absolutely is recession-proof. This avoids the risky laser companies and focuses on big equipment makers that hospitals need to function. The Consumer Fund, XRT. This is a SPDR and S&P retail. This tracks where people spend their money, including retail. Ulta is in this one, and Sephora's parent company is also in that ETF. So here's your assignment. Remember what we talked about last night, dollar cost averaging? You don't need to invest everything at once. You can invest a little bit every 2 weeks is recommended, but maybe it's once a month. Whatever you choose, do it consistently. You don't need $10,000. You can start with $100. Tonight, open up your brokerage account, open up the app, open up the website. If you don't have one yet, go back to night 3 where we started talking about this. Put $50 into one of these that we talked about tonight. Could be the XLV, the Safe Basket. You put $50 into Lilly, the growth engine, using a fractional share. So a fractional share, let's say the share is $100, but you only have 50. So so you got paid yesterday. $50 will help you buy half a share. When you get paid again in 2 weeks, then you'll own the whole share. And over the course of time, it will continue. So when you pick out a company, say, "Oh my gosh, it's worth $750. I don't have $750." You don't have to have $750. You can still put your $50 in there. It will take however long you can, however, whatever your interval that you've chosen, until that multiple of 50 adds up to one share. And so when people say, "Oh, I made X amount of dollars in the last year or 2 years," you then have to ask, "Well, how much have you been investing?" If you're only doing 50 every 2 weeks and someone else is doing 5,000, you can expect that you're gonna see a different outcome. But you both will see your money grow if you pick up all these stocks like we talked about tonight. So you put 50 into XLV, the safe basket, you put 50 into Lilly, the growth engine. Then 2 weeks from now, you do it again. 50 into XLV, 50 into AbbVie. Automate that deposit, put a reminder in your calendar just to keep an eye on it and to watch how things grow and change. So you get used to seeing that. You can start having questions that formulate so then you know what questions to ask and what help you need. That's your dollar cost averaging. That's consistency. That's going to help you build wealth. And immediately you can say, I own a piece of that company. I own a piece of the cosmetic industry or the healthcare industry. And once you do that, congratulations, because you're no longer a nurse practitioner, you're an investor. You own part of the industry. No application, no Botox certification, no permission needed. What we teach inside of the Alliance, we're not just teaching you clinical skills, how to take care of the patient. We're teaching you personal well-being, professional development, financial literacy, research, policy, media, technology, and business. This is the industry. This is how you stand out, not only as a business, but for those of you who are trying to get jobs. How else can you help the business and the industry grow when you have these other pillars under your belt? We're building a community of nurse practitioners who are clinically excellent and financially literate. If you want to go deeper, we just started our 6 weeks financial intimacy series within the Alliance. We're also combining that with dermatology, skin of color. So we fill those gaps that are not being filled at the moment. This week, I'm hosting the Money Workshop on December 16th, 19th, and 20th. DM me money, and I'll send you the link to register. If you register, you get access to the replay. So even if you're working on those nights or you're not sure what your week's going to look like, you'll get access to the replay. But if you show up live, you'll get access to my notes for the entire week. It's going to include the 4 quadrants, the total addressable market in cosmetics, your 6 foundation accounts, the 6 wealth building accounts, dollar cost averaging, and tonight's stock picks, the top 3 stocks and the top 3 ETFs that we just covered. Plus, because the education has to continue, the top 5 books for financial literacy. Everything you need to build your 2026 financial strategy will be in that workbook. So, is Caleb still here? If he's here, I'll let him in. Let's go over here to see what everybody's saying. Hi, hi. Night 5. Thanks, everyone. Hi, little sister. I don't have a little sister. I have a brother, uh, but her name is Little Sister. Looks like my cousin joined me. You guys told her to start investing. Cigar realtor? Caleb. Okay, Caleb. Where do you wanna come in on? You wanna come in over here on TikTok? I don't know if he's working tomorrow. Caleb gets up at 3 in the morning. That's the dream everybody's, imagining. You say you're gonna go be a nurse practitioner, right? We'll see if Caleb's still here. Let's see if he sent me I can't see if he sent me a message. Let's see. No. Okay, I think that's a wrap. Well, I hope you all got something out of this. Let me know in the comments if you got something out of this. Let me see some hearts going. Hey, D. Joe, Ali, Tom, that Tom Lokilo? Mhm. This was fun. I hope you guys got something out of this. I hope you found it helpful and that, if you haven't already gotten started, that this is your motivation to get started. It's always a great time to get started in the market, but certainly this time of year, there's a lot of opportunity for reflection. Oh, before I go, I just, when you talk about these kind of things, sometimes you might think about what you don't have and where everyone else is. You might get uh, so focused on comparing yourself to other people. Don't compare yourself to other people. Don't worry about what you don't have and what you weren't taught. Just focus on what you have right now. My love book always says everyone has a sad story. We all have a sad story. Don't let your sad story, your past, predict your future. Right now, every day that you wake up, you have the opportunity to start anew, to write. You have a blank canvas every single day. You can start over. In fact, even if you're an Olympic athlete, even they're starting over every day. What they did yesterday has nothing to do with what they're going to do today. So every day, you have a chance to get started. Cut yourself some grace. Is that my dad or my brother? My family's here. Hey, D. Joe. Thanks for being here, everyone. Well, that's a wrap. It's been fun. You can reach me on the Mahogany Dermatology blog. I drop videos live every Tuesday at 10 on YouTube under my name, Kimberly Madison MP. But the best place to reach me is the Mahogany Dermatology blog. Hopefully, I'll see you this week in the Money Workshop for Cosmetic NPs and entrepreneurs. And until then, I'll see you next time. And bye, Instagram. Thanks, LinkedIn and YouTube.